Dear students and viewers, I welcome you with another exam style question on the subject of management accounting. This question will test your knowledge and make you learn the concept of a specific order costing system. Zenith School of Accountancy is committed to providing free learning to students from all walks of life. To watch other exam style videos, please explore my channel's playlist. Please also subscribe to my channel to stay informed about new videos. Today's question is, which of the following would not be considered a specific order costing system? Option A, contract costing. Option B, process costing. Option C, batch costing. Option D, job costing. To correctly answer this question, we must understand the concept of specific order costing and other costing methods mentioned in this question. Okay, let's begin with specific order costing. Specific order costing is a costing method applicable where the work consists of separate jobs or batches. Broadly speaking, this type of costing method is used in industries that produce goods or services according to the specific requirements of a customer. The main subdivisions of specific order costing are 1. Job costing, 2. Contract costing, 3. Batch costing. Let me quickly explain each of these concepts for better understanding. Job costing, also called project-based accounting, is the process of tracking cost and revenue for each individual project. Job costing looks at each project in detail, breaking down the costs of labor hours, materials, and overhead. To apply job costing in a manufacturing setting involves tracking which job uses various types of direct expenses such as direct labor and direct materials, and then allocating overhead costs such as indirect labor, warranty costs, quality control, and other overhead costs to the jobs. A job profitability report is like an overall profit and loss statement for the firm, but it is specific to each job number. Job costing may be used in white collar businesses, manufacturing companies, medical services businesses, etc. A simple example of job order costing may be that if you go to your tailor and ask him to stitch your marriage dress. In this case, your tailor will quote you a price based on your specific requirements and the resources, that is time, labor, electricity, etc., that your tailor is going to incur, including his profit to fulfill your specific order. Another simple example may be beneficial here. Suppose you go to an accountant and ask him to file your annual income tax return. The accountant is going to charge a fee based on your individual profile and specific requirement. This is an example of a white collar business using job costing technique. Contract costing is the method of costing applied in a business where separate contracts of a non-repetitive nature are undertaken. Contract costing generally applies to large contracts where the duration of completing the task may be much longer when compared with job order costing. For example, a government agency may hire a firm of civil engineers to construct a dam or a bridge over a river. This task may take several months or years to complete. Similarly, a large company may engage an IT firm to develop a database management system for it. Because of the long nature of each job, this is classified as contract costing instead of job costing. Batch costing is a cost accounting method used by companies that manufacture or produce goods in batches. The production process is divided into batches and the cost incurred during the production of each batch are recorded separately. The per unit cost is calculated by dividing the total cost of a batch with the number of units produced in that batch. Batch costing is generally applied in manufacturing industry, making ready-made garments, toy manufacturing industries, tire and tubes manufacturing companies, pharmaceutical industry, etc. Now we look at the concept of process costing, that is a method of assigning cost to units of production in companies producing large quantities of homogeneous products. You also need to remember that in process costing industries Goods are produced as per general demand of those goods and not according to the specific requirements of an individual customer. This feature keeps it apart from specific order costing. For example, process costing is used by oil companies that produce millions of gallons of fuel and by processed food companies that make millions of identical packages of snacks. As the name suggests, process costing industries involve more than one process to complete the production of their goods. Hence the name process costing. For example, the petroleum industry, also known as the oil industry or the oil patch, includes the global processes of exploration, extraction, refining, transportation, often by oil tankers and pipelines, and marketing of petroleum products. Based on this discussion, you can identify that process costing is not a type of specific order costing. Hence, the correct answer is option B. If you have enjoyed this video, please do subscribe to my channel, click the bell icon for notification, and also share and like this video. Thank you for watching.